Greetings, everybody, and welcome to A&D Mortgage, using bank statements to qualify self-employed borrowers. Today's agenda will be myself, introduction, Renzo Hechevarria, National Account Executive with A&D Mortgage. A little bit about A&D Mortgage, program highlights, who is a bank statement borrower, program requirements, and loan scenarios. All your microphones have been muted for proper etiquette. Please type your questions into the chat. Moderator will send them an appropriate person for an answer. Use the raise hand feature to politely indicate that you wish to speak. And please turn off all cell phones, which I should probably follow myself as well. So thank you. My name is Renzo Hechevarria. A little bit about A&D Mortgage. Is a family-owned company under common ownerships, makes it easier to find the right solution for any mortgage transaction. A&D Mortgage is a full-service direct mortgage lender, servicing conventional, government, non-QM loans based in Florida since 2005. A&D Mortgage is expanding nationwide rapidly, with our wholesale operations growing exponentially. With the introduction of our niche programs, this rapid success helps us establish key industry relationships, leading to us acquiring a variety of loans through our Imperial Fund. Our wholesale goal is to bring our products and programs to selected brokers in order to provide them with a wider platform of services to their client. Our Imperial Fund, Stability and Focus, was founded in 2014 to invest in non-QM hard money and commercial mortgages, backed by our European banks conduit. Look for more programs in the following month regarding our conventional products. A&D Mortgage is trying to establish a national footprint. As you can see by the map before you, we are licensed in approximately about 20 states, where we offer all our conventional FHA products, non-QM, and our current bridge products. When doing business purpose loans only, please note you are able to do them in all the pink and the dark reds. And a business purpose loan is a DSCR, a non-owner or non-owner business bank statement. So even though you are not licensed in these individual states, you have the opportunity to provide your investor partners financing with competitive pricing. A&D Mortgage. Why are bank statements programs some of the most popular non-QM loan programs? They are a perfect fit for self-employed borrowers. As you've noticed, since the beginning of COVID, we have not provided much financing to them. So it's been supplying a much needed market with affordable financing to provide lower rates for those non-owner properties. With these programs, no traditional tax returns are required. This removes the need for converting deductions to income flow. Our 12 and 24-month bank statement, business, personal as income documentation. And our loan amounts are up to $4 million loan amount with $1 million cash in hand. If you have an LTV below 55%, there is no max loan amount. A&D Mortgage services our loans. This means we can grant exceptions such as higher loan amounts, higher debt ratios. If your loan has sufficient compensating factors, speak to your account executive. They might be able to itemize the compensating factors, provide a scenario to our secondary desk, and provide you comparable pricing and grant those exceptions. And that is before we actually submit the loan, providing you with a much needed answer in a timely fashion. Some of the program highlights are FICO, 580 and above, up to 90% CLTV. Loan amounts up to $4 million. As we previously spoken, we can go up above that amount. Max cash in hand, $1 million. No limit for CLTVs less than 55%. We have reduced our reserves down to 3 months. 12 months from bankruptcy or foreclosure. Mortgage histories with 0 times 60 in the last 12 months. And also allowed to combine the use of business and personal bank statements allowed. Condos and condotels also accepted. Please note, on business and personal bank statements, all individuals that are part of the bank statement must be part of the loan. Some of the details on our property types are owner occupied, second homes, and non-owner occupied. Again, minimum FICO is 580. Required a minimum of 10% down with those higher FICO borrowers, primary occupancy, single family residences, townhomes, condos, 2 to 4 units, HUDs, properties located in short-term rental communities limited by LTV stated on the rate sheets, leasehold, manufactured housing, and mixed use eligible per Fannie Mae guidelines considered on a case-by-case. Rural and agricultural properties are now also accepted. We have expanded those property types to provide more borrowers with financing across the country. 12 and 24-month personal bank statement requirements. 100% of stable deposits are used for income. Income that is earned will be used for your calculations. In other words, in speaking with some of our professionals, such as Stephanie, our Vice President of Underwriting, without people like her, we would not be able to do such wonderful jobs, and we thank her for her services. She describes it as, what do you make? What do you actually work for? So when you're going through and you're analyzing 12 to 24-month bank statements, you want to look at the deposits and what type of deposits they are, where they're coming from. Did the borrower actually provide services for those? So that means when it comes to tax refunds, will be excluded. Government grants will also be excluded. Tax refunds and COVID initiatives will also be deducted. So that way we're able to come up with a logical income calculation in which the borrower will likely continue to earn. With this, the difference in which this difficult economy has brought, we're looking to make more stable loans. And as we provide the stable income that a borrower makes, we're able to close loans more effectively, be able to service them, and maintain rates as profitable as possible and as low as possible so that your borrowers and our institutions are able to continue lending to all the demographics. Deposits are averaged over a 12 and 24-month period. Multiple accounts are actually allowed to be combined in order to bring those calculations together. Those statements can come from banks, thrifts, credit unions, and other regulated financing institutions. Well-regulated payment processors such as PayPal and Venmo and Zelle can now be considered on a case-by-case scenario, as we're finding as more individuals are now working from home. These are becoming more mainstream forms of collecting income. Only your business income will show on your bank statements will count as income, as previously discussed. Income must be disclosed on the initial signed 1003 and should be the max deposits of your income calculations. The underwriter may condition for large deposits are unusual for the income that has been documented within the history of the 12 months. So they may go ahead and, as you're speaking with the borrowers and you're going through and looking at their bank statements and reviewing what you have before you, you come across these statements or a little ask in front, try to see if you can document it. Makes the underwriter the underwriting process much quicker if you supply this information up front. Right now, with a lot of the business moving from the refinance industry now, from the refinances now into the purchases, time is becoming more and more of a factor. When reviewing 12 and 24-month bank statements and you have a purchase transaction with 30-day, it is great to be able to have your 12 months together, your income calculated, large deposits already submitted at the time of submission to support those, and that will allow your underwriters to be able to go through, read, calculate your income, and make a wise decision in order to make minimal conditions on your loan to be able to satisfy a quick closing. Business ownership requirement. The 12 and 24-month bank statement program is a business must be self-employed borrower. Borrowers do not have to have 100% of the ownership of the business. The minimum requirement is at least 25%. Verification of the borrower's business self-employment is required, such as third-party verifications. These can include websites, industry licenses. One of the most common places to verify borrower self-employment would be simply by contacting the Secretary of the State online, printing a copy of the person's business license and submitting it with the program. The business for qualifying purposes must have been in existence for at least 2 years. Other forms of verification might be a CPA letter that verifies the length of the ownership of the business, the percentage of the ownership that the individual has, as well as the type of business that we can go ahead and explain what we are looking for when calculating the stream of deposits that are coming in. Case scenario: a truck driver with 720 FICO wants to purchase a property in condo in California, 50% LTV, 12-month bank statements, owner occupied, and a 0 times 30. These type of borrowers, which generally will, when calculating on a conventional transaction, will have huge profits and losses, in which some of them might not be the 3Ds, deductions, depreciations, and depletion. When using 12-month bank statements and being able to calculate their deposits along with their expenses, able to qualify up to a 50% debt ratio. Also, consider when doing a purchase transactions above 2.5 million, our guidelines actually state currently that we can go up to a 55% debt ratio for those borrowers, therefore allowing more borrowers to qualify for these type of transactions. Another scenario would be Sam. He's a self-employed borrower as well, looking to refi a single-family home in Florida. Could not qualify with tax returns, but he has 12 and 24-month bank statements that with deposits and P&Ls can be used for qualifying income. Another note to have when calculating bank statement income is if you only require less than 50% of the deposits, no P&Ls are required. We will take the 50% of the deposits, average them over 12 months and use that income as for qualifying purposes, trying to provide your borrower with the best and lowest rates. When starting to use A&D Mortgage and you're looking to find out what the income you would be able to derive from your bank statements, please visit our website at admortgage.com/concierge services/. Enter the borrower's information. You're able to compile, link your 12-month or 24-month bank statements into a single document, upload those files, and send them over. Our concierge desk will go ahead and calculate those bank statements and send them back to you for being, so that way you have an average of the deposits. Once submitted to the underwriter and reviewed with the rest of the file, they would then be able to determine the actual percentage to be used off of those deposits for qualifying income. Why bank statement programs? It's great for self-employed borrowers. No tax returns are needed, only bank statements. It's easier to qualify income. You do not have to do your SAM's income calculation. Much quicker and higher credit scores provide lower rates. As you've noticed in the past 4 to 5 years, the industry has gone more to an a la carte type services. The more income you're willing to provide, be it 24-month bank statements to your full docs, the lower your interest rates are going to be. So therefore, currently 12-month bank statements are considered par, and 24-month bank statements will give you a premium. The more you supply to verify income, the more your lender is going to be comfortable and the lower your rate's going to be for your borrower. Many different ways of finding out the type of rates that we can provide you for these type of bank statements would be Easy Quick Pricer, located on many of your AE's signatures. We have a new appraisal center in which providing up-to-date tracking for your appraisals, a central location for ordering amongst your many AMCs, and also and also a way for tracking the responses and automatically now gets uploaded to our system. We are also trying to consider our partners, and we have developed the A&D Studio, Get Empowered to say, get empowered to say yes with design marketing. We will be able to provide you flyers and marketing to issue to your retail and your wholesale clients. Of course, webinars series every Tuesday at 1 p.m. The ins and outs of A&D Appraisal Center will be issued on March 22nd, Tuesday at 1 p.m. A&D Studio, the best of marketing tools for mortgage brokers, March 29th at 1 p.m. Take advantage of asset utilization programs, April 5th, 2022. Q&As with broker support on April 12th at 1 p.m. Couple of other items to notate on bank statements. When going through and reviewing your bank statements, one other note that I want to make that's very, very important. When reviewing 12 and 24-month bank statements, and in light of previous markets with COVID and many hardships that many of the borrowers have had to endure, please review for all NSFs. NSFs right now are, with most lenders, are between 3 and 6. If you review your bank statements and you find out that your borrowers do have NSFs, you may want to speak with your account executive because this will not disqualify your borrower from financing. As a week or two ago, we had a P&L program that allows your borrower to go ahead and qualify for the same type of statements with just an additional 8 and fees that will allow you to go ahead and provide your borrowers with financing should your borrower have NSFs on their bank accounts. And it's an unfortunate situation, but it occurs many times. But as we said, that with the LLPAs and financing, the more information you provide, the lower the rates. Just because they may have had a few hiccups with NSFs, we will go ahead and give consideration. We will also go ahead and grant some exceptions if it's like between 3 and 6 and they're isolated incidences. But should that not work, we also provide our P&Ls, and your account executives will be able to explain more about that. Another caveat that I've been asked on personal bank statements. 100% of personal bank statement deposits can be made. To go into this question a little bit further, even though we are using 100% of the personal bank statements, there are different ways of looking at a personal bank statement. Some personal bank statements are literally that borrower has a business bank statement, uses personal bank statements, derives all their expenses from their business expenses, and only deposits their income into their personal. In that case, 100% of personal bank statement income will be used. If the bank statement is commingled and the underwriter is able to see that the borrower uses it for personal and also has their business expenses coming out, then the P&L will then come back into play, and we can still use that, but we will not be using 100% of the personal bank statement income. We will be treating it as a business bank statement. So please note on those scenarios that depending on the number of personal bank statements in which they're used, you want to look at what's also within the expenses. Certain types of risks can be inherent to bank statements. If the underwriter is looking at income and there is a downward trend, those will provide inherent risks in which now, as you would notice on a self-employed borrower or on bank statements, that the income is depleting, the borrower's business is starting to not be able to support its business expenses. Those type of liabilities can roll over to a borrower's personals, and at that instance, a underwriter may go ahead and have to take second consideration, and that could provide a negative impact if the borrower does not have sufficient income to qualify for the mortgage. Please remember that even though it is an average, we are looking to maintain solid loans, and the underwriter will be looking for the borrower's ability to make consecutive payments once we close the transaction. That way, mortgages stay solid, servicing keeps their payments coming in, and we're able to continue financing other individuals. Another good question I just received. On personal bank statements, you from time to time may go ahead and see that you have W-2 income. Your primary borrower is self-employed. However, his spouse, who happens to also be on the bank statement, happens to be a wage earner. We can go ahead and take the average of the bank statement income, calculate that bank statement income, and itemize that under the borrower's income. We will then go back and deduct the W-2 income. We will go ahead and ask for the W-2s and the pay stubs in the VOE, calculate that income separately, and be able to qualify the borrower to be able to get a combined income to qualify your refinance or purchase transaction. Want to notate? Please contact your account executive if you're not currently receiving emails regarding our upcoming webinars and events. We will be rolling out a new LOS processing system in the next couple of weeks. There will be training ongoing for that, and we'll be listing webinars. Please also check our website at admortgage.com for upcoming events. This recording will, this presentation will be recorded and also listed on that on our webpage. Please visit us at our social media sites on Facebook, LinkedIn, A&D Mortgage, Telegram at admortgage.bot. Very good source of information on what's going on a daily events. Direct links to our websites, broker concierge, broker approval, and rate sheets. We have a non-QM exchange and all in Facebook as well as LinkedIn. Final steps. When you log out, there will be a brief 5-question surveys. Please let us know how we're doing. All webinars are recorded and available within 24 hours on our website at www.admortgage.com/learning-center. Become a partner with A&D Mortgage. Reach out to your account executives for any further questions. Thank you and have a wonderful day.